Hedgeye process is about weighing the probabilities of things. It's not about, like, Wall Street likes to tell you the certainty of things. Like, again, balance sheets are in great shape. Europe's different this time. It's all just like they're categorical statements of some perceived truth. They're not ever-changing probabilities that change with time and space. They change with price, volume, and volatility. They change as things change at a faster pace. I mean, as you note, when you get deeper into phase 3 of a bear market, the reflexivity factor and the non-linearity embedded therein, reflexivity being things feed on themselves, becomes an increasing factor. But just getting the direction right from a probability perspective is much more important than getting the specificity right. Now, going back, by the way, I mean, I just had a great call yesterday with one of our, when I say sharper clients, I always define that by their Sharpe ratio, not just like IQ points. And he said this. He said, you know what? I'm really pissed off at myself. He's a generalist, that I didn't make more money short these bank stocks. And he was like really hard on himself. And he's had not only a great year last year, but he's having a good year this year. And he said, all 4 guys that I know at one of the major pod shops, all 4 of their financials PMs, because he's a generalist, so he talks to as many do, they'll call, Jed, who runs this financials book at ABC, or they'll call Jane over here, who runs the consumer book. And that's how they, get smarter about being a little bit closer to the fire, because they're generalists. And he said all 4 of the best long short portfolio managers in financials that I know missed it entirely. And he's like, I'm disappointed in myself, because it's so easy to understand that banks being long duration or long-term bonds into this rate hike cycle. He goes, that might be the easiest thing we've ever seen come. And he's like, I'm having these discussions with these guys, and they're all guys, and they're all like apoplectic about it, right? And now they're all making the valuation case on book value on banks. And he's like, man, it's like, I'm glad I just don't run a long short financials book, doing it that way. Because really a lot of it is like, you talk about a general level of macro and awareness. I mean, watching what these guys, like I had the volume on in the office yesterday. You weren't there, but we had a lot going on in the office. But listening to this testimony yesterday from the chairman of the FDIC, I mean, and it's like he had a Trumpian comb over of white hairs. Those things are going to be coming out one by one by trying to explain what went on here from an oversight perspective, because it's really not that complicated. It's dumbass bankers doing dumbass things.
On the Thursday night, when it was going down, if you will, with Silicon Valley, I was on the phone till I think about 11:30, almost midnight, talking with clients. And I remember one conversation. I was talking with actually a friend of mine who's also a client, and he was telling me that he had been going back and forth speaking with really one of the sort of, if you will, like most acclaimed kind of legends within sort of our fiefdom. And, I certainly won't say who it is, but this individual was really sort of surprised that there was the concern that there was over the Silicon Valley situation, and didn't really think it was warranted. And, and look, we could say, oh, what a dummy, but like, this guy's nobody's idiot. And he's been on the right side of some massive things in the past, multiple times. And so to your comment about, these guys these PMs at some of the pod shops, like totally missing it. Like, I'm not surprised, because, I think a lot of people missed it, frankly.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.